Okay, let's unpack this. Whenever I open my medicine cabinet, I see these little bottles of pills, and I think about the brand names on the label. The big pharmaceutical giants with the flashy TV commercials and the massive headquarters.
Right, the household names. The ones making the billions.
Exactly. But today, we're going to flip that script
Yeah.
completely. We're digging into the hidden infrastructure that exists underneath all of that, the engine room of the entire industry.
Mm.
Because those big companies, they don't do it all themselves. In fact, they do less and less of it themselves every year. There is a massive machinery running in the background that tests, that validates, and essentially proves that a drug won't kill you before it ever gets near a human trial.
It's the classic investment story of picks and shovels. If the biotech industry is the gold rush, the company we are looking at today isn't looking for the gold.
They're selling the pickaxes.
They're selling the pickaxes. And in this case, the pickaxes are high-tech laboratories and, well, mice. We are talking about Charles River Laboratories, ticker symbol CRL. And to really get a handle on this, we are looking at a serious stack of sources. We have a brand new research report from Compasscope dated February 9, 2026.
Right.
We've also got their Q3 2025 earnings transcript to see how the numbers are holding up. And we have a very specific and honestly kind of mind-blowing update on the FDA and how regulations around animal testing are just fundamentally shifting.
And that FDA piece is the linchpin for this whole discussion, because the mission for this deep dive is really twofold. First, we need to understand how Charles River dominates the contract research organization, or CRO, space.
Okay.
But secondly, and maybe more critically for anyone watching this space, we have to look at the existential threat they are facing. The industry is trying to move away from animal testing.
Which is their absolute bread and butter.
It is. So the multi-billion-dollar question is their moat wide enough to survive a complete reinvention of how drugs are developed? Can they pivot from a biology company to, like, a data company? So let's start with the business itself. What exactly is Charles River Laboratories? Because to the uninitiated, it sounds like a place you'd go for a scenic kayak trip, not a global biotech juggernaut.
It does sound peaceful, doesn't it? But in the biotech world, CRL is the dominant global contract research organization, specifically for the early stages. They specialize in preclinical work.
Preclinical, so before it ever gets to a person.
Exactly. Before a drug ever gets into a human clinical trial, it goes through Charles River. They work with everyone, biopharma, government agencies, academia.
Yeah.
Their core function is speed. They accelerate the development process from I have an idea to I have a drug.
And looking at this Compasscope report, they break this massive operation down into 3 key segments. Let's walk through them so we understand the machinery here. The first one is RMS, or Research Models and Services.
Right. And research models is the polite industry term for animals, mostly rodents. This is the foundation of the company. But I want to be really clear here. We aren't talking about pet store mice. These are what the report calls GMS, Genetically Engineered Models and Services.
That sounds incredibly sci-fi. EMS.
It is sci-fi. Think about it. If you are a researcher testing a new cancer drug, a regular mouse might not tell you much. You might need a mouse that has been genetically engineered to have no immune system so it doesn't reject a human tumor graft.
I see.
Or you might need a mouse that has been edited to carry the specific gene for Huntington's disease. Charles River breeds over 150 different strains of these highly specific animals.
So they aren't just selling a mouse. They are selling a scientific tool, a standardized instrument.
Exactly. If you are running an experiment in Boston and your colleague is running one in Berlin, you need the exact same biological baseline. Charles River provides that consistency. That's the services part, too. They even have a business line called Insourcing Solutions.
What does that entail?
Basically, they will send their own employees into a client's facility to manage the vivarium, the animal labs, for them. So big pharma companies don't even have to deal with the headache of animal care.
Charles River just handles it on site.
They just handle it.
Okay, so that's RMS. Then we have the revenue heavyweight, DSA, or Discovery and Safety Assessment.
This brings in about 60% of their revenue, and it answers 2 simple but critical questions. Does this drug candidate actually work? That's the discovery part. And is it safe? That's the safety assessment.
This is the toxicology part, right?
Precisely. This is the regulatory gatekeeper. Before the FDA lets you put a new molecule into a person, you have to prove it's not toxic. Charles River runs those massive studies. This involves general toxicology, safety pharmacology, looking at how the drug is absorbed and metabolized.
And this has always been animal-based.
Almost entirely animal-based, though that is starting to change to a hybrid model, which we'll definitely get to.
And then the third leg of the stool is manufacturing support. This seems a little different from the other two.
It is. This is the quality control arm. It's smaller, but very important for the supply chain. They do microbial solutions testing for bacteria and endotoxins. They have these proprietary systems called Accugenix and EndoSafe.
So making sure the final product is clean.
Exactly. If you are manufacturing a vaccine or an injectable drug, you need to prove it's sterile. Charles River provides the technology to do that fast. They also do biologics testing, ensuring cell and gene therapies are pure.
It seems like they cover everything, from the moment an idea is born until it's ready to be bottled on the manufacturing line.
That's the end-to-end value proposition. But they are also dipping their toes into the future. The Compasscope report mentions their investment in emerging tech, specifically NM's new approach methodology.
NMs.
This is stuff like AI modeling and lab-grown organoids. They know the wind is changing, and they are trying to build the sails for it.
So let's look at this from an investment perspective. If they're so dominant, why can't I just start a competitor? What is preventing Host Speaker's Lab from taking their market share? Let's talk about the moat.
Well, unless you have a few $billion and decades of genetic breeding history, you're going to have a hard time. The Compasscope report highlights a few key competitive advantages. First is just pure scale.
Okay.
They control about 35% of the global market for research models and 33% of outsourced safety assessment.
That is a massive chunk of the market, essentially a duopoly or oligopoly in some areas.
It is, but the real moat is switching costs. In science, reproducibility is everything. If you start a long-term study using a specific Charles River mouse strain, you cannot just swap it out for a cheaper competitor's mouse halfway through.
It's like changing the ingredients in a cake while it's already in the oven.
Perfect analogy. It would ruin your data baseline. You'd have to start over. So once a client starts with Charles River, they are sticky. They tend to stay. Plus, there is regulatory alignment.
Meaning the FDA trusts their work.
Exactly. Charles River standards match the FDA's Good Laboratory Practice, or GLP. When you submit data to the FDA, having the Charles River stamp on it means something. It's a trusted supplier status that a new startup just wouldn't have.
And the bundling aspect, the one-stop shop.
That's it. They can handle the mouse model, the safety study, the consulting, and the IND filing. Most competitors can't do all of that. It just simplifies the supply chain for big pharma.
Speaking of competitors, let's look at who else is on the playing field. We have LabCorp.
LabCorp, specifically their Covance division. They are huge, but their strength is really in clinical trials, human testing. They don't have that dominance in the research model phase, the animal breeding that Charles River has.
They're more focused on the later stages.
Much more focused on later stages.
And there's Wuxi AbTech. We see their name popping up a lot.
They are a major player, especially in manufacturing and biologics, but there is a crucial distinction here that investors need to watch: geography. Wuxi is heavily concentrated in China.
Geopolitical risk.
A huge one in the current climate. Western pharma companies have real concerns about data security and supply chain stability. Charles River dominates the U.S. and European markets, which is seen as a much safer bet for many Western clients right now.
So they have a geopolitical moat as well. What about Eurofins?
Eurofins is good at testing, good at genomics, but they are very niche. They just don't have the full bundled service. And then you have Envigo, which is part of Innotiv. They compete directly on the research models, the animals, but they are much, much smaller in scale.
So the verdict from the report seems to be that Charles River's position is pretty defensible because it's just really hard to replicate a global supply chain of genetically pure research models.
It is defensible against current competitors, but, and there is always a but,
right.
The ground is shifting under their feet. This brings us to their growth strategy. How do they grow when the thing they are best at, animal models, is under pressure to go away?
The report calls this a strategic pivot.
Right. They have this initiative called the Alternative Methods Advancement Project. They are trying to be the first mover in NAM's non-animal testing, so they don't get disrupted by it. They aren't trying to stop the change. They are trying to own the new technology, too.
It's a hybrid approach.
Exactly. They aren't ditching animals overnight. They are integrating traditional testing with AI and organoids. The idea is to offer clients a mix. You might use AI to screen 10,000 molecules, narrow it down to 10, and then test those 10 on animals.
And Charles River wants to get paid for both steps.
For both steps.
And financially, they are tightening the belt while they do this. The report mentions a lot of restructuring.
They are doing some serious financial engineering. They are targeting $225 million in annualized savings by 2026, plus another $70 million from procurement and automation efficiencies.
So they're shedding costs.
Big time. And they are planning to sell off underperforming assets, about 7% of their 2025 sales, to focus on high-growth areas.
And they announced a big stock buyback.
A new $1 billion stock repurchase authorization. That's a signal to the market. They are basically saying, we think our stock is undervalued, and we are going to support the price while we navigate this transition.
But let's talk about the risks, because the Compascope report lists execution risk as a major section. And the biggest one is obviously the FDA.
The existential threat. The FDA is pushing to reduce reliance on animal testing. Since 60% of Charles River's revenue is tied to models and safety assessment, this is the long-term risk.
Yeah.
If AI gets good enough to replace a toxicology study, Charles River needs to be the one selling the AI, or they lose that revenue.
There's also client concentration.
They rely heavily on biotech firms, not just big pharma, but the small, scrappy biotechs. And as we know, that sector is very sensitive to interest rates. When rates are high or funding dries up, small biotechs stop spending.
They just pause everything.
They delay their trials. That hits Charles River immediately.
And they have a decent amount of debt, right?
It is about $2.2 billion. It's stable, but it limits their flexibility. If revenue drops because regulations change faster than expected, that debt becomes a heavier burden to service.
Let's zoom in on the now.
Yeah.
We have the Q3 2025 earnings transcript. What is the current state of the union for Charles River?
Well, as of November 2025, revenue was essentially flat. It was down about 0.5% to $1 billion for the quarter.
That doesn't sound like a growth stock at the moment.
It's not a boom time. Manufacturing was down significantly because they lost a large commercial cell therapy client. That just goes to show the risk of client concentration we just talked about.
One client leaves, and the whole segment takes a hit.
Exactly.
And the safety assessment business, the DSA segment.
Margins there were pressured. Why? Because of lower study volumes. But uniquely, they also had higher costs because they were hiring staff and buying primates in anticipation of a recovery that hasn't fully hit yet.
So they're spending money to be ready for work that hasn't arrived.
That's the gamble. But the CEO, Jim Foster, sounded cautiously optimistic.
He did.
He noted that biotech funding showed signs of improvement in Q3. And here is a key stat. October 2025 was a record month for biotech funding. Proposal activity is up. Clients are still cautious, but the money is starting to flow again.
And they made a very interesting hire that caught my eye.
Yes, Dr. Namanje Bumpus. She's the former FDA Principal Deputy Commissioner, and they brought her in to lead their scientific advisory board for NAMS.
That's a pretty strong signal.
It does. It says, we aren't just guessing what the regulators want. We hired the regulator. It shows they are serious about aligning with the FDA's new direction.
Which is the perfect segue to what I think is the most fascinating part of this deep dive. The FDA shifts. We have a specific update from February 2026 on the FDA Modernization Act 2.0.
This is the game changer. The act removed the legal requirement for animal testing before human trials.
I want to be really precise here. Does that mean animal testing is banned?
No, and that is the most common misconception. It is not a ban. It is a direction of travel. The FDA is basically saying, if you have a better way to prove safety, show us. They are opening the door for innovation, not closing the door on animals entirely.
And where are they starting?
They are piloting this with monoclonal antibodies. Why? Because antibodies are very species specific. Testing a human antibody on a mouse often doesn't tell you much anyway. So they are accepting data from organ-on-a-chip and AI toxicology models instead of animals for some IND reviews.
And we have some hard numbers on this from the February 2026 update.
We do. Non-human primate usage is down about 3 to 4%. Dog usage is down about 9%, often replaced by mini pigs or AI. And here's the adoption rate. About 30 to 35% of new antibody programs are using primate-free packages offered by CROs like Charles River.
That is a significant chunk of new business moving away from the old model. That's not just a pilot, that's a trend.
It is. And Charles River is adapting. They aren't fighting it, they are monetizing it. They have built a $200 million NAM portfolio. They are actively marketing primate-free IND services.
So they are essentially cannibalizing their own legacy business before someone else does.
That's the strategy. But there is a lot of inertia in the industry. Remember, 90% of drugs fail in human trials. There is a huge incentive to find better models than animals because, frankly, mice aren't tiny humans.
Sure.
But validation takes time. And for complex drugs like gene therapy, you still need animal testing to understand systemic safety. You can't simulate a whole body on a chip just yet.
So Bringing it all together, what are the keys to watch as we look forward?
Based on the Compascope report and the market trends, I'm watching three things. First, regulatory velocity. How fast does the FDA expand these waivers beyond antibodies? If they start allowing small molecules, the pills we take every day to skip animal testing, that accelerates the timeline dramatically. Biotech funding. That surge in late 2025, was it a blip or is it a trend? Charles River needs those small biotechs to keep spending money. If interest rates tick back up, that funding could evaporate.
And third,
NAM adoption versus cannibalization. Does investing in AI and organoids create a new, higher margin revenue stream? Or does it just replace the high revenue animal studies with lower revenue digital ones? That's the economic question for their shareholders.
and we also have to watch competition. Can nimble players like UAGI or Eurofins eat away at the edges of this new non-animal market while Charles River is busy restructuring?
Exactly. Charles River has the scale, but sometimes scale makes it harder to turn the ship. They have a lot of legacy infrastructure to manage while they try to build the new lab of the future.
So synthesizing all of this, Charles River Laboratories is a dominant incumbent. They have the moat of scale, regulatory trust, and deep integration. But they are operating in a market that is fundamentally changing its rulebook.
They are trying to pivot from a biology-heavy past to a technology-heavy future. It is a difficult transition to execute, but they seem to be pulling the right levers, cutting costs, hiring the right experts, and investing in the new tech.
It really leaves us with a provocative thought to end on. We've talked about the moat being the animals, the specific proprietary mice that define the data. But if AI and organoids eventually prove better at predicting human drug reactions than mice, does the company with the best animal models win? Or does the winner become the company with the best data?
That is the multi-billion-dollar question. If the data becomes the product, the entire competitive landscape shifts. It might not be about who has the best vivarium, but who has the best algorithm.
Something to mull over. If you want to dig deeper into the numbers, the Compscope report is a goldmine. Thanks for listening to this deep dive into the hidden machinery of pharma.
Always a pleasure. This content is produced by Compascope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compascope.com.